What's up, guys? August is here. If you can believe it, August is here, and you're wondering, Eric, what stock should I buy now? We just had a major run in the month of July. The Dow was up 6.7%, the S&P 500 was up 9.1%, and the NASDAQ rocketed 12.4% just in the month of July. One of the best months we've had in a long time. And so you're wondering, what stock should I buy? We've already had this nice bounce. Do I sit in the sidelines? Are there any opportunities out there? I've got your back. I've got 10 stock picks here that I think are attractive still at these prices and lower. A couple are reporting earnings, and I think they're good ones to at least put on your watch list. You're gonna want to see this one, guys. 10 stock picks, rapid fire. Okay, first stock pick, guys. I get that this stock might not be in fashion in this recessionary type environment, but this is a mission critical company, mission critical stock that I think, whether the economy's good, bad, or indifferent, businesses are going to continue to pay their subscription. This is a SaaS company, one of my favorites, endpoint security. You know what it is? Of course, it's Crowdstrike. Best of breed for endpoint security. It has competition, of course, but these guys are crushing it. I'm going to show you some numbers here in just a second. You can see on the 52-week range, $130 is where it kind of bottomed out over the past year. It was as high as almost $300 at one point as well. So in the 52-week range, this bottomed out May 12th, 2022 at $130. Decent buy there. $298 was the top back November 10th, 2021. I want to show you the short interest. So it does have 5.64% short interest. Days to cover says 3.52. So you've got about 11.85 million shares short. Crowdstrike does report earnings the end of the month here, August 29th, so keep that in mind. So a quick glance at the numbers here on Crowdstrike, guys. Very impressive. $1.92 billion in ARR, that's annual recurring revenue, 61% ARR year-over-year growth. You've got 71% subscription customers with 4+ modules, 17,945 subscription customers, and $158 million of free cash flow. The subscription revenue year-over-year growth, 64%. You can see they continue to ramp upwards from FY18 to 2022. That's 1,242 all the way up to 16,325. And now Q1 FY23, they're going to report again earnings here in a couple weeks, but 57% growth at 17,945 subscribers. They have 65 of the Fortune 100. They have 254 of the Fortune 500 and 15 of the top 20 US banks. That tells you a lot there. Banks require the highest level of security possible, and 15 of the top 20 US banks trust Crowdstrike as that best of breed endpoint security provider. If for some reason this pulls back because of earnings or what have you, I think it's an opportunity. I prefer to buy this stock $150 or less. So you might not get it. I still think it's attractive at these levels, but it isn't cheap. So keep that in mind. Now, these stock picks are not in any particular order, but the second stock pick on the list is Visa. It's everywhere you want to be. Now, this technically is a DGI type hybrid, 0.71% dividend yield. It does have a P/E ratio. It's a little bit high at 31.33. But you can see this was a $247 stock back August 2nd, 2021. The low bottomed out at about $185. They just reported earnings last week, very solid. So EPS of $1.98 beat by 23 cents. Revenue was $7.3 billion, beat by $230 million. I think what you're seeing here is that when things get expensive, inflation, people especially in the US, when you think of the US consumer, we like to buy our stuff. We're a consumer-driven economy. And when things get tight, oftentimes people just buy stuff they can't afford and they use credit cards, and you're seeing some of that pull through. So this is 19.1% year-over-year growth. That revenue is $7.3 billion. I think that you're going to continue to do well, especially as people are opening up, getting out of the house more and things like that, spending money on gas, spending money on trips and so on. Of course, if we go into a recession type period, if it does get worse, this could get hit again. But I honestly think at these price levels, if it does pull back anything from here, I think it's a buy. If it gets down, I'm going to show you a chart here in 1 second. So it's got $201 support. You can see here in the blue line. This did get down to $185.91 here. This was back here in June 15th or so of 2022. And I said here, this is a previous chart day we did. It should be in orange. I'll just change it right now. So boom, orange. Okay. So I said that 201 support, look for 220 plus. It got up to $218.05. It's kind of pulled back. You can see it has strong support here at 201. This long wick here, this candle, it just barely touched that and bounced right off of that. That's the support line. This P level where it's at about right now, $212. I think it's going to continue to grind higher, assuming the market stays bullish. I think it's going to probably break this 220. You could see it go maybe even up to this R3 at $230. But this is a long-term investment, guys. Use dollar cost averaging. Of course, this isn't the bottom, but if it does pull back, I think if you can get this stock around $200 or less, that's where I'd pull the trigger. If you're in our Patreon Discord, we are buying this stock in the $30 range, $35 range. and you've done really well. It's pulled back. I think the market is sleeping on this one. Now, I do think we need to see AMD earnings, which is going to report this week. That'll give us a better idea of where this might go. But MRVL Technology does also report August 25th, so keep that in mind. Now, these guys, listen to the CEO here. Listen to this conversation with Jim Cramer.
All right. Now, one time I was worried a bit about MRVL and China because of United States friction, but obviously the People's Republic said yes to the IPHI deal. And then more importantly, Samsung is probably, I think, the #1 client in the world right now. And that is your partner on advanced 5G networks. How is that partnership, which was announced March 25, going?
Yeah, well, let's start with the first one. We're thrilled to have gotten approval from China back in March, about a month ago. That was, certainly, I think ahead of a lot of people's expectations. The primary reason, if you're interested as to why, is it's a very clean deal. And there was overwhelming support from all of our customers globally, including in China, that really saw the combination of MRVL and Inphi is taking two very good companies, putting them together and making them even more viable and strong. And as a result, it was a very smooth process to get approval. And I'm thrilled, as you mentioned earlier, that we are able to close the transaction today. As it relates to Samsung, they've been a long-term partner of ours. We are a key supplier to them and partner for them in their 5G networks products. And we've only continued to grow that partnership. And as you mentioned, we recently announced that we were moving into the radio head, which is where there's additional content that MRVL is pursuing. And we actually announced that we did a system-on-chip product for them that reduced their power consumption by 70% versus the prior generation they were using. And that's huge when you think about the upcoming 5G build-outs that are going to be happening right here in North America.
The market's sleeping on this. I feel like they forgot about this acquisition. In the past year, FY22, we completed 2 acquisitions to significantly increase our opportunity in cloud data centers. We saw Intel report earnings. They're getting absolutely crushed by AMD, by NVIDIA. And I think that MRVL has a chance to play with the big boys because Inphi does have some very sophisticated hardware. When you think of cloud data centers, Inphi Corporation, whose market-leading electro-optics portfolio provides high-speed connectivity both within and between cloud data centers. This could be huge. It's kind of a unique niche that, NVIDIA and AMD really aren't focused on, right? So don't sleep on MRVL Technologies. They've got a lot going for them as well in the EV space. I think these guys are going to probably report decent earnings here August 25th, and I think it's an opportunity, especially if it gets below $50 a share. Now, Boeing did pop 7% today, 6.72%. It's at $170 a share. So a little bit late to the party, especially considering it did bottom out at $113 here on June 14th. That would have been a strong buy. It's ran pretty hard. And the high really on this August 12th, 2021 was $241. But I think this still could have some upside room. They reported earnings on July 27th, and they weren't spectacular earnings by any means. So you look at EPS, non-GAAP EPS, negative 37 cents, missed by 27 cents. Revenue of $16.7 billion, missed by $830 million. So why would I suggest even looking at this stock? For this reason right here. Sources tell CNBC that the FAA has approved inspection protocol revisions that should allow the jet maker to resume deliveries of its 787 Dreamliner. This, I think, could be big if they could start delivering these. This is going to be a long-term kind of turnaround story. At one point, guys, I remember thinking that Boeing was a stock that you had to own in every portfolio before the pandemic. It's really a duopoly. You think of Airbus and you think of Boeing. And when you think of travel, when you think of longer term, it's only going to grow more and more and more. I think Boeing's going to do just fine. And really, the United States and the global economy needs Boeing to be successful. They've had a lot of hiccups, a lot of snafus. I think they're starting to turn the corner. The stock is definitely bottomed on the charts, and I think it still has room to go higher. Take a look at it. Boeing, ticker BA. This next stock pick is another cybersecurity name, and we did a deep dive on the channel maybe a month or two ago. This one is one I never pulled the trigger on. I think it looks really interesting. Now, these are often wrong, so I'm not suggesting that you go out and run and buy stocks just because on Fidelity Technical Analysis it says that something's going to happen. Tenable Holdings bearish downside breakout chart pattern. So what I'm saying here is if this comes to fruition, this will be an opportunity to buy the stock. I don't want to buy the stock at $38.70 where it's trading at today. This is saying it could get down to the range of $29 to $31 a share. I think at $30 or under a share, this would be an attractive one. Put it on your watch list. Tenable, ticker TENB. This stock has made a major bounce off the bottom. It bottomed at $71.60 on July 5th. And we covered this one on the channel multiple times. We said in June that AMD was a buy if it got to $75 or less. If you took advantage of the opportunity, you're up about 25% right now. The stock's hovering at $97.48, trying to push past $100 a share. Now, they're going to report earnings tomorrow. So I'm not telling you that you should go out and chase the stock at $100 a share. I'm saying if there's any kind of pullback from earnings, unless the earnings information is really bad, but if there's a knee-jerk reaction and this comes back, it's an opportunity to buy more shares. I could argue that if you're looking at a long-term investor, even at $95, $90 a share, I still like AMD at those price levels when I'm looking longer term. Their growth is probably going to impress tomorrow. I'm taking a little bit of a risk by saying that. Maybe I'm wrong, but I think AMD is going to report decent earnings. It's probably going to go higher. If it doesn't and it pulls back, unless the earnings are catastrophic for some reason, I think it'll be an opportunity to add to your portfolio. AMD. I've been saying this since August of 2020. Semiconductors are the new oil. We're going to stick with another semiconductor stock, ACLS. Now, if you're in Discord, Patreon, ACLS Technologies is one that we were buying last year in 2021. We were buying in the $30 range. It's $71. It did actually bottom out August 3rd, so not too long ago, at $37.91 when all the semis got sold off, semiconductor stocks. I don't love chasing the stock when it's, bounced so hard off $37.91, but it's at $71. The high was March 2nd, 2022. And the reality is this company is doing really well, and it's still only a 19.36 P ratio. If this thing does happen to pull back, if the greater market pulls back and this gets a little bit lower, I think it's an opportunity to add. I like this stock long term. I'm up on this stock like 150% or something like that. And I think they're going to continue to do well. This is a semiconductor manufacturer, smaller cap. In fact, the market cap here, $2.32 billion. ACLS, ticker ACLS. Oh, and one last note, these guys do report earnings on August 3rd. So of course, if something happens just like at AMD and the stock pulls back, it might be an opportunity to add. So I don't know if I would buy it before earnings necessarily, but if there's a pullback on earnings, I would look at an opportunity to add to it. We've got a pilot in our community. His name's Matt. I won't say his last name just to protect his identity. But Matt told us about this one probably a year, maybe 2 years ago. And this thing actually, it's $6.82. It was $6.13 on August 17th. The high on it March 1st was $10 a share. It still says it's a 50.92 P ratio. This is Playa Hotels and Resorts. I think this might be a good one to look at. They also report earnings on August 4th. So this could be one where it's going to be a risk to buy it before earnings because it could come down harder. I think that these guys will probably have a decent earnings report just because when I look at travel, I look at the demand for travel and it seems very high. So in theory, on paper, it seems like they'll probably have a decent report and this stock could go higher. But I'm not a financial advisor. I can't tell you to buy or sell before earnings. But I think it's one they should at least put on your radar. I think it's attractive at the $6 range. This is Playa Hotels and Resorts. I've got two more stock picks for you, but I have to announce that this video is sponsored by The Motley Fool. If you want to see the 10 best stocks to buy now, visit fool.com/Fired Up Wealth. Also, if this was helpful, guys, this video is helpful, drop me a like, drop me a comment. Let's get a conversation going down below. Let me know if there's a video I should do a topic on, if you want to deep dive on a topic or if you want me to cover something. If you haven't subscribed to the channel, please do subscribe at this time and click that bell to get notifications. So what's the next stock pick? You probably think I'm crazy. These used to be called Square. Now it's Block Inc. It's $77.59. The low on this was $56. This was a $289 stock on August 5th, 2021. Square reports earnings on August 4th. Could be a little bit of a risk, but based on what I'm seeing from Visa and from some of the other fintech providers that have reported earnings, it looks like they're doing pretty well. So I won't be surprised if Block has a decent earnings report. $56, in my opinion, was too low in the stock. I understand it doesn't have the PE ratio. I understand the drama behind it. I understand cryptocurrency, crypto winter, all that kind of stuff. But if this stock actually could report decent earnings here on August 4th and it could pop higher, we'll see what happens. I know that maybe some of you watching this might not like this stock, but I think long-term, these guys are going to do just fine. Check out Block Inc., ticker SQ. If you're an owner of Mickey Mouse, you've been absolutely hammered over the past couple years. This got down to $90.23 on July 14th. It's now trading at $106 a share. It was $187 in September of 2021. Now, these guys still have some problems to sort through. It still shows a 71P ratio, so it could be expensive. I like this stock, especially $100 or less. And I think that eventually here with some time, Walt Disney is going to start doing better on their numbers. They increased the subscription price for ESPN Plus. They've been doing some great things. People are getting out and about more, so the theme parks are doing better, the cruises are doing better. They've got a lot of great movies, and you think of Marvel Comics, there's tons of stuff coming out. I think Walt Disney is a long-term investment, makes sense, $100 or less, even in this range, dollar cost average. But I hope this video is helpful, guys. I appreciate your time and attention. Drop me a like, drop me a comment, subscribe. Have a great rest of your day. Take care.